Hello and welcome to Crypto Weeklies. Today we cover Bitcoin in 2026 forecast. None of the content financial advice. These are the monthly momentum or Heikin-Ashi based candles for Bitcoin. What you can see over here right now, the price of BTC is coming close to $75,000 from the yearly open. Let's say if this year, like the typical bear market year, that is for example 2018 over here, with the series of monthly red candles in terms of the momentum candles, not the regular candles. These are, you can find these candles over here. They are called Heikin-Ashi or momentum related candles. These candles are typically drawn to analyze the overall momentum. You can see the candle body starts at the midpoint of the previous month's candle, so that helps identify the overall momentum, whether the trajectory of the price action is it bullish or bearish. So if you toggle that between the regular candles, these typically have the open, high, low and close related metrics. But if we go and check back the Heikin-Ashi candles over here, they help identify a clearer bear market picture. So for example, starting January, February 2018 all the way to about March 2019, there are only series of red candles. Similarly over here in starting December 2021 till all the way December 2022, 1 year of bearish candles. This time around something similar might happen in 2025, 2026. This time around the area did not start like it did back in, so for example in 2018, this red series of bearish candles started in February 2018, which is the bear market year, second month of bear market year. In 2021 it started in the post-halving bullish year, end of the post-halving bullish year in December. This time around that downturn started even one month earlier in November 2025, and this ended in December 2022. So something similar might happen if we go by 12 months out into the future. November 2026 becomes the likely candidate. October, November 2026 becomes the likely candidate if we have a shorter bear market this time around. And from the yearly highs to the lows, again, not going by the Heikin-Ashi candles but by the regular candles over here to identify the year to date. So for example, from January 2022, that's where the open for the year January 2022 was, and the close was over here. So for example, towards the end of 2022, the drop was 65% at December 2022. In January 2018, from January 2018 to the January 2019 or December 2018, the drop was 77%. This time around, if we go by, there was a decline of 12% from bear market to bear market, 77 from negative 77% to negative 65% in the bear market year. If we go by negative 50 to 53% drop in 2026 from the open in January at around 90k. So going by that logic, if the drop occurs as high as about 50% from that level, you would find Bitcoin at a bottom closer to 45k level from these monthly candles. If we try to analyze it in terms of moving averages, what we have over here is a model which is a composite risk score model. This is cryptoweeklies.com, link on the bottom of your screen. This is the home page of the site. This composite model says that in terms of the accumulation, neutral versus distribution zone, right now, as the price of BTC has rose quite a bit in the last few weeks or so, you can see at a monthly level also, both March and April have been thus far green. And you can see the overall momentum and the overall bullish market picture is more clear using these narrative word cloud. The size of the bullish narratives over the last 7 days on the social media platforms has eclipsed the size of bearish narratives in a bear market year. That means it's typically a bullish time in the midst of a bear market year, and Bitcoin and ETH related narratives are garnering attention. That means these two flagship cryptos are garnering significant attention. This is also, you can evident by the Bitcoin and ETH dominance eclipsing that 70% market share of the overall crypto market asset class. and the others apart from Bitcoin and ETH are less than 30% now in terms of the market share. So both Bitcoin and, you can see last month the Bitcoin dominance was less than 59%, ETH was at around 10% or so, and others was almost 31%. Now they are less than 30%, almost closer to 29%. So it's a shift between higher quality from the lower quality or lower market cap cryptos to the higher market cap cryptos. And you can see both Bitcoin and ETH are now out of the accumulation zone. That's because again, this model or this composite risk model takes into consideration all of the individual risk related models that we have on our website, the regression or logarithmic regression based deviation, the time weighted average price, the 20-week simple moving average price based deviation, drawdown from the all time high, and volatility and beta. All of them together are normalized between 0 and 1 to provide a composite risk score of greater than 0.33 for Bitcoin and 0.32 for ETH. So both are outside of the accumulation zone. Even all of the other major cryptos are closer to the 0.3 risk level. You can see Sol is above that, Tron is above that, XRP almost at the end of the accumulation, BNB closer to it, so on and so forth. So what this means, personally speaking, based on the diminished decay model in terms of the regression based non-linear polynomial regression based interpretation of what the fair value of Bitcoin is, this white line tries to attempt to identify the mathematically derived fair value using regression techniques to identify where is the likely trajectory for Bitcoin in the future, and also at a current point in time, if Bitcoin is from a historical context, either undervalued or overvalued. And in terms of not just using one line as a reference, these other bands, the lower bands, help identify the one standard deviation residual to the downside. Two band is two standard deviation. One standard deviation is about 68 percentile bear case for Bitcoin. Two standard deviation is a 95 percentile, or this dark green line is the 95 percentile bear case for Bitcoin. So one standard deviation bear case or a 68 percentile bear case bottom, which again there is 32% chance that the bear market bottom is lower than this green line, comes at around 59k. So as the price is now rallying from this one standard deviation support that it hit, this undervaluation zone that it hit in February 2026, back then that support level was slightly under 60k now, or 58k, above 58k. Now this has grown to 59k. So if let's say in the later half of May or some June drop, like Bitcoin had that drop in May 2022, 4 years later could be May 2026 or June 2026, that region between the white line and green line, that's where Bitcoin is currently trading at, like it did in that cliff zone, or the cliff zone between that May 2022 till about June 2022 region in 2022. This time around, this has gone prolonged from February to April 2026. Again, that's because, again, one reason, as Bitcoin becomes more or less more adopted and less volatile, the bull market gets stretched out and becomes less volatile to the upside. You can see this by two standard deviation function over here. The orange line, this is two standard deviation residual drawn from the fair value to identify the overvaluation territory in the asset class. In the bull market of 2025, this line was barely touched, whereas in 2017, 2018 or even 2021 time period, this line was heavily exceeded in the bullish or euphoria instances of the bull market. So as the asset class gets more mature, the likelihood that the 3 standard deviation comes into play goes lower down with time. This is about 99.7 percentile accuracy that the bear market bottom is higher than this green line that is currently at around $33,000. A 2 standard deviation makes more sense as asset becomes more and more, BTC becomes more and more adopted. This line right now for Bitcoin is closer to $45,000. So I'll just try to extrapolate this behavior to identify where the price action could go in the later half of 2026 by using just rudimentary extrapolation techniques, again not sound analysis or so. just 6 months out, by taking 6 months out prior in the prior, that is closer to October, almost $3,000 gain in that 6 month period. Continuing with that similar trajectory, this green line towards the end of year 2026 could be closer to $50,000 or between $48,000 and $50,000 as a frame of reference. Nonetheless, as the price is going from this bottom, so from this light green line or 1 standard deviation lower band 1 to the fair value, this elevates the overall risk level in a bear market. If Bitcoin is in a bear market like it was in 2022 or 2018, 4 years later in 2026, accumulating really close to the fair value in the bear market year is typically elevates the risk level, as the likely trajectory is down than up in a bear market year. So that's the word of caution using regression techniques. Even the time weighted average price risk score, this is all days since 2014. The average price of Bitcoin all days in 2014 influenced this white line over here, which is the time weighted average price. Not just looking at a simple moving average price for let's say last 200 weeks or last 200 days. This is all days traded Bitcoin since 2014, since it started becoming a known entity. And this white line over here provides a frame of reference for the bear market support as well as bull market heightened risk level, based on the color codes over here, which are drawn with respect to the proportional and time adjusted distance between the price and the time weighted average price. So that time weighted average price, in a simpler words, is just understood better as the gravity of time or the weight of time applied to the price action. It helps identify where Bitcoin spend its time as an asset and where is the typical undervaluation and overvaluation zone. Typically, whenever the risk is less than 3, that is the safer zone. Right now, the risk level in terms of the time weighted average price model is risk level 7. And risk level 7, this yellow, is typically, again, you can see from bear market to bear market, this is the level. The yellow level is where in 2022 as well as in the 2018. Before that major bottom occurs, Bitcoin has this tendency to spend a lot of time in this yellow region. Maybe it goes one level higher like it did in 2018 in that orange color, or in 2022 where it spent a lot of days to months in this risk level 7 before having that penultimate drop or the ultimate major drop to that risk level 5. So risk level 5 and below, one could make a generalized assumption based on the nature how the bear markets are shaping. So for example, in 2014, 2015 bear market, risk level 1 was the bottom. In 2018, risk level 2 was the bottom. In 2022, risk level 3 was the bottom. Maybe this time around even risk level 4 or risk level 5 might be the bottom. Right now at risk level 7, the bottom is far out using the time weighted average price approach. Again, there are two ways where this bottom, even at this price, there could be a bottom. Like for example, at 60k, if let's say the difference between the price and the time weighted average price diminishes, if the price goes to 60k, in February 2026, the difference was 129%, because at that time the time weighted average price for Bitcoin was 27,000. Now the time weighted average price, now that we are in mid-April, the time weighted average price is 28,000. So let's say in the later half of 2026, the time weighted average price goes to $32,000. So for example, in 2 months, the time weighted average price grew about $1,000. And looking at this exponential scale of the growth of the price action of Bitcoin, price has been about $27,000 for quite a long period of time, essentially since October 2023. So that's October 2023. That's where the price was lower than $26,000. So almost from that October 2023, if Bitcoin stays about this level for till October 2026, that would be 3 years being at a higher price level than the time weighted average price. This price action pulls the time weighted average price as a magnet. So for example, over here, as the price action grew rapidly over here, or in the euphoria phases of 2017, you could see that the time weighted average price essentially grew in a step function at those levels, and then again kind of stabilized in the bear market. So the time weighted average price based bottom prediction for Bitcoin in terms of the risk levels is better estimated using risk level 5, 4 or 3. I'm not saying that the risk levels have to go to risk level 2 or even at risk level 3. Risk level 1 would be lower than the time weighted average price, and we haven't seen Bitcoin trading lower than the time weighted average price for more than 11 years now, almost 11 years now, since 2015. So risk level 1 and 2 are kind of out of question unless we get a severe recession. Not looking forward to that kind of environment, or not being like a like too bearish or a doomsday caller. Rather than that, in a nuanced fashion, if we toggle away the risk level 3, at least risk level 4, if not risk level 4, at least risk level 5 should ideally come into play towards the end of the bear market. There are two ways: either the price action stays sideways and the time weighted average price kind of catches up to the price action over here to lower the risk level, or there is a drop somewhere in the second half of 2026. Now, if we look at closely in terms of the deviation between the price and the time weighted average price, towards the end of January 2026, this deviation was 180% or 87%. Now this deviation has gone down to 170%. Although the price is largely, again, if we look at the current price, it's at around 75,000, averaged out for today at right now the price is slightly lower, but taking an average of the day, it's closer to 75k. So if we look at a prior instance where the price was close to 75k, the difference was 176%. Now the difference is only 170%. For getting into risk level 5 territory, we are looking at a difference between the price, the higher point or the upper limit of getting into the zone of risk level 5 is somewhere close to 90%. So a 90% premium on the price action gets to risk level 5. To get to risk level 5, a 90% premium on 60k would require the price action, if the price action is at 60k, it would require the time weighted average price to be higher than 30 to 32k, because if the time weighted average price is only 28,000 and bottom is 60,000, that area over here, if we look at the February drop, still gets you closer to 129% in terms of the time weighted average price risk. So two things need to happen: either the price needs to be lower than 60,000, or the time weighted average price needs to be more than 32,000. So let's see what happens in the next half of 2026. Nonetheless, at this point, with this elevated risk level, looking at the historical bear markets, accumulation of BTC at these elevated risk level, personally speaking, does not make much sense. With that, I would like to conclude. Hope you enjoyed the content. All of these live models are available on my website, cryptoweekly.com, link on the bottom of your screen. This website uses a lot of statistics and machine learning based techniques to identify bull case scenario, bear case scenario, machine learning based price forecast for not just Bitcoin and ETH, but for majority of assets, at least the top 100 cryptos by market cap. You can see not just USD pairs, but also Bitcoin and ETH pair on the forecast, as well as some of the lesser known cryptos and ETFs and proxies related to Bitcoin and general overall market. And again, you can read up more about me and my work on this website as well. And if you have any questions, you can reach out via comments. Thank you and have a nice day. Hope you enjoyed this video. Bye bye.